What up? What up? Good afternoon, Mr. Jumper. What's going on? What's going on? Let's get it. Let's get it. Let's see. Have another minute. Yeah. So, my brother. Good afternoon. Good afternoon. Forget to hit that like button. Yeah. I apologize for those of you guys who were waiting for the class early in the morning, but my body couldn't wake up, bro. Last night we were putting up the Christmas tree, and we ain't finished till almost 4 o'clock in the morning. It's a done deal for me, bro. Christmas tree look nice, look better than last year's. But yeah, man, couldn't do it, bro. And my body woke up too. Like I woke up 30 minutes before I had to be on. You know, I looked. I'm like, yo, if I wake up now, I'm gonna be so tired the rest of the day. I'm gonna be dragging because I'm not gonna be able to fall back asleep. Once I get up from that bed, I'm not going back. So I got up. I didn't get up, right? But then I couldn't, I didn't fall back asleep, right? Because I just didn't like full sleep. No, like I was like in and out. Then I get up. I'm like, oh, it's like 5 minutes till, and I go on the Discord, and that's when I set the send the message. I went to sleep. And I'm like, if I don't fall asleep in like 10, 15, if I don't fall asleep in like 10 minutes, I'm getting up. I'm just gonna go do the class. But I knocked out. Because usually when that happens, I just get up. I try not to. I'm gonna give you a gem too. You know, an alarm clock. You may see it as a tool, right, for help you wake up, right, at a certain time, yada yada yada. But there's certain things that we have to think about an alarm clock, like why you use an alarm clock, right? Because you have something called um, damn, what's the name I'm looking for? I'm still woozy. Like your circadian rhythm, which is like your biological clock, your clock inside. So you kind of know when things are gonna happen, when you need to do something, especially if it's something you want to do. Notice when you were a kid, if there was something you wanted to do, you would wake up before it needed to happen. But as an adult, you're governed by an alarm clock, right? And you started to be governed by an alarm clock when you started to go to school because you didn't really want to go to school. But on a Saturday morning, you knew you had this to do or you had this fun activity, you was up. Think about that, right? So also, I say that to say this. I say that to say that the alarm clock now, you have something called a snooze button, right? The snooze button is something that, you know, lets you do it later, right? Wake up a little bit later, right? So that snooze button on the alarm clock is actually hurting you because it's setting up the procrastination matrix program from the start of your day. I want you to think about that. What is procrastination? Procrastination is leaving something for later, right? That's the definition. Knowing that you have to do something now, but leaving it for later. So that snooze button is actually doing that. You got to wake up now, but you're going to wake up later. No, a little bit later. You got to do this now. I do it a little later. Do it, then later comes and you never did. Or later comes an hour. I do it later and push it off and push it off. And those are the same. That's the same behavior. Remember, you're developing a behavior, and an alarm clock does that for you. That snooze button is very dangerous. That snooze button. So even on my phone, if I need to set up an alarm or something, or I need to set up like I have alarms all the time, like check your charts at 4 o'clock or whatever, every 4 hours. Like you hear it from time to time. I don't have a snooze button. Right? I don't have a snooze button. If I really need to set up an alarm, for example, if I'm gonna hop on a flight and I know I cannot miss the flight, right? Like I can't miss it, right? And there might be times I might be tired or whatever the case is, right? I set up the alarm, right? But I'm not gonna hit the snooze. I like snooze setting is turned off, and it's funny how you could turn off snooze setting on your alarm, right? You could turn it off, the snooze setting. So be careful with that, and don't be subject to building that procrastination construct into your programming, and it gets used against you, bro. So yeah. So I guess that's it. I guess we're gonna start just us. Let's see how many people are in here. There's 6 people in here. You snooze, you lose. That's exactly right. You snooze, you lose. Especially in trading. You snooze, you lose. You snooze, it's not that you lose. You snooze and you miss out and you have to wait for the next one. So, that's one of the reasons why we definitely use alerts on our charts. Because alerts allow us to walk away freely from the chart, come back to the chart when the price has reached a point of interest, and then we start attacking. Not sit there and just wait and wait and wait and wait, right? So, but yeah, so what's going on, guys? Welcome to the channel. We got 7 watchers in here right now. What's going on, you guys? Just so you guys know, we're having a prop firm giveaway for the month of December for Christmas. In order to qualify for the giveaway and be part of the drawing, you have to be a Discord member and a subscriber to the YouTube channel. So make sure you subscribe to the YouTube right now and make sure you hit the link in the chat or the description to join the Discord. On December 25th, we will be doing the drawing live, so everyone gets a chance to see that there was no favoritism. We're going to be using one of those websites that you do raffles with, that you put everyone's name on it and it just spins, and then we hit a button and it chooses. So it's not going to be a biased raffle, you know. So make sure to join. Make sure to, that's what a way to start your new year, with a challenge that could really impact your life and your finances. So you know, make sure to join, guys. Make sure to join. All right, so it's almost 1:30. We're starting in a minute. We dropped down to 4 viewers because they didn't like the chat. I mean the giveaway. So back to 6. So guys, so let's start this party. So first and foremost, welcome guys. Welcome to the channel. Welcome to the weekly market breakdown, Vice Traders Academy's weekly market breakdown. In this stream, what we do is we break down these 9 pairs that you see on the right side of your screen, right? And what we're looking for on the weekly market breakdown is to start looking for what pairs, you know, are more likely to have a setup for the week for us. So we already, know what to look for during the week. You know, you're not scrambling to find something to do, because when you try to find something that's not there, that's when you get into trouble, right? That's when you start losing trades. You get margin called out. You hit your stop loss. So this is um the class that we do that in, right? On top of this class, you also have 2 classes that kind of blend into this, right? You have the daily market breakdown this Monday through Thursday at 7 p.m., New York time, Eastern time. And then you have a live trading session, right? That Mr. Jumper trades live, right? These exact same setups that we're calling out. So you get a chance to see, from top to bottom analysis, because this class, all we doing is looking at the daily chart and the 4-hour chart. We don't go lower than there, right? But then when you go to the daily market, the daily market breakdowns, that's when we in the 30-minute chart, 5-minute chart, right? And then when you go to the live session for the entries, right, then you at the 5-minute, 1 minute, right? So if you understand what a top to bottom analysis is, and you want to know how to apply it in real time, right? Here's your chance to learn that, right? So make sure you subscribe, make sure you hit that like button, um, and let's get it. So last week on Sundays, right? Like what I used to do like a mini lesson before the check down, right? Just make sure that we're either touching basics, right? Learning a couple new things if you guys are learning a couple new things, but basically is refresh on your basics, right? Because sometimes we steer away from our basics and think that our basic skill set or the basic steps that we need to be taking, we can start overlooking them, and that gets a little bit dangerous, because as a trader, you're building a trading plan. Your trading plan does not consist of overlooking your steps. It consists of, consistently, following your set of rules, right? Because that's what's going to make you a profitable trader, right? Making sure that you can follow the same presets of rules, right? Similar to an EA. This is why now you see a lot of EAs out in the market, right? Expert advisor, auto traders, right? What an auto trader does is just execute commands. So if first and foremost, let's say you're gonna develop a EA for a breakout strategy, right? The first thing it needs to be able to analyze, what's the previous swing high and swing low. That's the first thing the EA is going to look for, just like you will look for. What's the previous swing high and swing low, right? These are my breakout target. These are the 2 places where price will break out. Then will be the next set of rules, right? They might say volume. They might have a volume rule. Is the volume reach a certain amount, right? They might have, price needs to break above. They will have the price needs to close above, whatever that swing high was to go up, right? And in order for it to break out, it need to have 3 candles. And the candles, these are the presets of the 3 candles. It has to be an engulfing candle, whatever the case is, right? So these are things that you can pre-program into a expert advisor. But who's better than the expert advisor? You are. Remember, there's no expert advisor without the rules that you will come up with for your trading strategy for you to execute, just like a trading advisor will execute, right? So what I was taught, when I first started to trade, You know, my mentor did not believe in EAs, did not believe in robots and nothing like that. What I'm talking about, this is almost 10 years ago, right? So there was it in the market? Was it existing? Yes, but people didn't really understand it at that point, right? And he used to say that you're smarter than the indicator, you're smarter than the expert advisor, right? So I never believed in it, right? Starting out, now I know that you could definitely set up a EA with the proper trading strategy and the proper coder to code the EA for you, right? So with that being said, that's why basics are important because EA, what could make an EA so great is because the EA will only stick to the basic rules that you code into it. It will not invent something new. It will not get out of the normal parameters, right? EA is just code if this then that. If this happens, do that. If this happens, do that. If you analyze this, do that. So with that being said, you have to make sure that you're acting as such as well, right? Be very robotic, right, when it comes to your trading. Be very, if this then that when it comes to your trading. So, that's one of the reasons why I want to go over these basics. And also last Sunday, that class, the stream crashed, right? So we didn't have a good stream last Sunday because of that. So let's take a look. I think it was mini lesson. So this is a continuation of last Sunday's, right? I honestly don't even remember where we were, to keep it real. So I'm gonna do my best to just look at the mini lesson that we were doing and try to figure out what we were doing at that time. Oh, this was the change of characters, right? Do you guys remember what's the last thing we did? That's correct, right? Jumper say you have to be your own EA. You guys remember or no? There we go. Yeah, so we were going over the different types of market structures, right? Last Sunday. We was going over we were going over the different types of market structure. We went over breaker structure and we went over change of character, right? Market structure. Thank you. Now, with that being said, let's just recap on it, right? So we have three different types of market structure. We have an uptrend structure, right? And an uptrend structure basically is a structure that's giving you higher highs and higher lows, right? Which is what this is right here. Let me take these lines off. Pat, 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 pat. Where's this at? All right. So what is that? That's when the price is moving up, right? Basically, it makes a push to up and then it pushes back down, right? Some people will call this a run up, a push down, a run up, a push down, right? So there's so many different terminologies out there. But the price pushes up, right? Then retraces back down. Price pushes up, right? And retraces back down. But when price is pushing up and retraces back down and then pushes up again, it's causing what is named as a higher high and a higher low. What does that mean? That means that when the price pushed down, before it pushed up, it created it set, well, when price pushed up, it sets a new low, right? That low that was set here is higher than the previous low. So that's why this is called a higher low, right? When the price pushes and again pushes up, right, and makes a new high, this high becomes a higher high. Why? Because this high is higher than this high, right? And so forth and so on. So the thing will continue until a moment where price changes, right? Like in Dick's example, price made a higher high here, a higher low, right? Then here made an equal high. What is an equal high? When price is literally in the same place that it was previous at. And price can make an equal low too, right? Or equal low is something like this. Then when price pushes down, it comes to the same place that it was before, right? And that causes an equal low. So you have those two other things that can happen. But in this example, you had an equal high and then you had a lower low, Why a lower low? Because this low became lower than this set low that was previous. And then price pushed up, right? And created a lower high. Why? Because this high is lower than this high. Then pushed down and created a lower low. Why? Because this low is lower than this low. And push back up, create a higher high. Why a higher? I mean a lower high? Because this high is lower than this high. And then it continues to cycle until again it changes, right? We have a lower low here, then we have a higher high, right? The sequence over here was lower low, lower high. Then it turned and made a higher high, higher low, higher high. Now, when this sequence changes over, right, from one to the next, right, we call this a change of character, right? What is a change of character? It's very simple definition. A change of character is when price changes from making from an uptrend to a downtrend or from a downtrend to an uptrend, right? And what does a change of character look like from an uptrend to a downtrend? Uh, let's draw it real quick. From an uptrend to a downtrend, we have higher high, higher low, higher high, higher low, right? Can make a higher high, lower low, lower high, lower low, lower high, lower low, right? So basically what that is, when price changes, right? This is what a change of character is, right? Again, a change of character is when price changes from going up from an uptrend to a downtrend or vice versa. Notice that the sequence on the left side was higher highs, higher lows. Then all of a sudden the price just changed, right? And when it changes, how do you know? If you just draw a line, right? Let's think about here. If you had a line here, right? Some people would say this is the support line. When it breaks support, turns resistant, that's when the price changes, right? Remember, everyone uses a different terminology. I just use line. I don't use support and resistance. I don't use that term, right? So notice here, price didn't break. Price went up, right? And then I move my line to the next higher low, right? And price actually broke here. So when price breaks here, this is what's guided me to know that hey, we had to change a character, right? And let me draw an example, when it changes from bottom up, right? So everyone has a visual. So you have lower low, lower high, lower low, lower high, lower low. Then you have a higher high, higher low, higher high, higher low, right? So forth, so on. So again, in this example over here on this side, what do we have? We have price, right? Making lower lows, lower high. That was the sequence, right? Downtrend, lower low, lower high, lower low, lower high, until, right, price at one point in time made what? A higher high, breaking the lower low, lower high sequence to higher high, higher low, higher high, higher low. And again, that's what a change of character is, right? And I'll color code it so you guys understand. So then, right, you have something called BOS, breaker structure. All right. So what is a breaker structure? A breaker structure is when uh, in a sequence that you're moving up, right, or down, right, is when the higher high going to the top side is broken, right? Meaning that they made a higher high, that the previous higher high, which was this one, was broken to a new higher high, right? So this structure was broken. This higher high, higher low, higher high structure continued going, and it broke the higher high to make a new higher high, right? Broke that higher high structure to continue, right? And again, it happened here. Higher high made another higher high. So it broke structure here, right? Then at one point, remember, price changed direction, caused a change of character. So now the breaker structures is going to the downside is when the price breaks that lower low, that causes a breaker structure. So every time price breaks lower lows, it causes a breaker structure. So in essence, right, a change in character is a breaker structure, right? Because it's breaking the higher high structure to lower low structure. But that's why we name it change of character, right? Because if we say that everything is a breaker structure, you will get confused. You will still be thinking that the price is breaking to the top side instead of changing character to the bottom side. So again, in essence, a change of character is a form of a break of structure, but it's a break of structure that's showing change of trend direction, right? So that is, right? So the other type of market structure that is not just moving up or moving down, it's consolidation, which is the type of structure that you need to, you know, get in tune with and really understand it, because these are the conditions where, you know, you don't want to be trading going the wrong way, right? These are the conditions where price is using this type of structure to trap traders and cause confusion, panic, and fear, right? When the price is moving sideways. So, what does it mean that the price is moving sideways? It means that it doesn't have no direction, either going up or going down. It's just literally, you know, oscillating up and down in a set range without any trend direction, without any clear trend direction, right? Because as you can see in this example here, price is just moving up, right? There's no trend direction. Price is just moving sideways. Notice it went from left to right, left to right, left to right, left to right, left to right. But up here, it's moving up. It's going up, down, up, down, up, down, up, down, right? Here it's moving down, up, down, up, down, up, down, up, right? You can see direction moving that way, down. You can see direction moving up. But here, the direction is only moving one place and it's sideways. It's going that way, right? That makes sense? Any questions, feel free to ask, guys, right? So this was the lesson that we were going over with last week, right? So I'm gonna leave it off there because I just spoke a lot about what that is, right? I'm pretty much gave you guys what a BOS is, gave you guys what a change of character is, right? What consolidation is, how the market flows, right? We could look at this here and see how market's moving up, causing a break of structure. Well, here caused a break of structure. Why? Because the market continued to go up. It didn't change, right? The next one caused another break of structure, make a higher high, higher low, right? And continue to make another higher high till it got to the top. When it got to the top, it caused a change of character. Why? Because the market stopped making higher highs, higher lows. There was a stoppage here, right? Then changed around and made a lower low, lower high to cause the change of character, right? And the cycle continues. So this cycle is what's happening in the charts all day long, right? Certain trends obviously will be higher, like the trend will be like this, higher, right? Certain trends, you know, could just be from right here, it turned around and went down, caused a change of character, right? So this is why, you know, when you see in our class that in our daily market breakdowns that we literally just mapping this out with the path tool everywhere, is for what? It's for us to have a visual and for us to always stay in line with price action and what the price is doing, right? We don't want to be guessing. Oh, I think I see this. No, I've marked it so I can have a visual representation of it. So it leaves the guesswork out of the window, especially when you start into trade and you're a new trader, right? You want to make sure that, you know, things are clear, that you market enough charts and you market it to the point that it's clear and you can really see it, right? Until you get to, you know, to be better at it where you don't need to market, right? There's a lot of traders that do it, a whole lot of traders that do it. They're just not marketing. There's a whole lot of traders that do it. They're just not even telling you that they're doing it, right? Because, you know, it's something that they want to keep it a secret because that's their secret sauce, is market structure. Anyone who trades technical analysis looks at market structure, guys. So whether they explaining it to you or not explaining it to you, whether they're marketing the chart or not marketing the chart, right, it's there, right? And they're definitely using it. Okay. So I hope that makes sense. So that's today's lesson, right? Next Sunday, we'll start applying market structure, right? Well, not next Sunday. We can just do it today because today we're going to see it, right? So let's get into the class, right? Let's get into the breakdown. So in the breakdown, right, we trade a little bit different to a lot of other people. There's a pattern that we call the market makers pattern, right? And the market makers pattern is what gives us our guide, right, to know the true direction of the market, right? So without that, you know, we're just looking at basic market structure that everyone else is looking at, right? That sometimes we know that market structure doesn't play out according to plan, right? Or that your support and resistance levels are violated, right? So or extended, right? So, with that being said, this is why the market makers pattern is the guide, it's the roadmap to the total price action. So, with that being said, you know, in this class, what we do, we update that, We update our daily market structure and our 4 hour market structure. Then we update our daily zones and our 4 hour zones. So that's basically what we're going to be doing. So let's start with AU. So AU, we can see that we are in A2, right? Right now, price is retracing, right? It can retrace all the way back to the top. Remember, this we in A2 is what? A consolidation zone, right? So in this consolidation zone, what can we see? We don't see, clean market direction, right? Price went up for a while, went down for a while, right? Chop went up and down, right? Before it went down again, and now it's going up, right? So, but at the end of the day, it is trading in a zone, right? And what is that zone? That's the zone that is trading in, right? So that lets me know that we are in a consolidation zone, right? So we are in a consolidation zone. Just so you guys understand it a little bit better, look at that second zone of consolidation, that previous zone of consolidation. Notice how price was chopping up and down, right, in a set range until it broke out of there and started to create what? Lower lows, lower highs, lower lows, lower highs, right? So now you see the two that we were going over with, what chop looks like and what a trend looks like, right? And remember, they're using both of these structures simultaneously together. It's up to you to understand where you are and what you're looking at, right? Because that's going to start helping you develop your trading plan and how to tackle an entry. So if you're not looking at these things or you haven't heard of these things, make sure to join our Discord. The link in the description is in the chat also. When this is the things that we target, that we focus on, right? So and the everyday lessons, the everyday lives, this is exactly what we do. We don't go into in-depth explanations because we're just doing a breakdown. It's not a full-blown class where it's a Q&A for structure and things like that. But you students ask a couple questions in those lives. But to really gain the knowledge and everything, right now we're actually doing free one-on-one sessions, Mr. Jumper and myself, and you get to request those on the Discord. So make sure you join the Discord. There is a channel. Notice over here, one-on-one request on one-on-one with myself or Lewis. There is a schedule there that you get to use. You plug in the time and the date, and we'll take the time out for you guys. Just keep in mind that when you do that, make sure it's 48 hours out from the time of your request, and make sure that we're able to make that time for yourself, for you guys, right? So that's what that is. Now let's take a look at our structure, right? We had we had a peak formation high, then we had a lower low, lower high, higher low, higher high, lower high, equal lows, higher high, lower low. Notice how over here there was no sequence, right? The sequence was not lower low, lower high, or higher high, higher low. It was just a mix of everything, right? When you're doing market structure and you get in that mix of everything, it should already be an alert on your head, like, oh, I might be in consolidation. There's no set direction. I need to wait for price to start going into a direction and create one of those sequence, whether it's higher high, higher low, or lower low, lower high. So it did all that until it came over here and started to make lower low, lower high, lower low, lower high. Okay, now I'm in a trend, right? Prior to that, I wasn't because the sequence was off, right? Similar to what happens here, right? We started to just do chop, do. We started to make lower lows, lower lows, equal highs, higher low, right? So hey, we know that hey, we're still in the chop because we know we're in the zone, right? Now let's update this daily pattern. So now we went from here to up here, right? And we're still moving up, right? This is not that it's a set in stone, right? So I'm not even going to put it on price. We just know that price is moving up. So I'm going to leave it right here on this side. Right? Hope that makes sense. All right, so you're looking at that. Now we're going to look at the internal structure to the daily structure, which is our 4 hour. Right, so looking at a 4 hour, we drop to the 4 hour to see what is the structure over here. Right, the internal structure, we can see that we have higher highs, higher lows. And this is, internal, external structure. We'll go over that next Sunday in the mini lesson before all this. right? For you guys who understand what that is, right? We see that the price is making higher highs, higher lows, higher highs, higher lows, internal higher highs, higher lows to the daily structure, right? Now, let's start looking for our 4-hour zone, our trading zone, right? So the previous zone was here and price broke out. When price broke out, what was the push that caused that break? It's this push, so that's why that's there. And this is our new high. So right now, our 4-hour, right now price is trading in between this 4-hour zone, this 4-hour high and this 4-hour low, right? We're technically stuck at that high, right? It's testing the high, but that's where we are right now, right? Another thing that I totally forgot was that it's the first of the month, so we need to be looking at our monthly moves, right? I totally forgot. So let's look at our monthly moves. So we're looking at right now once a month we look at what was the previous month, what was price action, right? And what we can see, we had previous 2 months of rise. So with that being said, what are we expecting this month, right? Even though the total market structure is down, right? The market makers pattern is down. We had a previous 2 months of rise. So this month, we are expecting them to make a new high before the price turns around and starts going back with the total market makers trend, right? So with that being said, we know that this month we're going to get a new high, and we're doing counter highs, right? So I'm going to make this purple, right, to let us know that hey, not even make this purple. We don't. Let me just. We just need to. You need to have a notebook next to you. You need to write these things down, right? Because that's going to guide you for you to understand. Right now, right? We want to trade short. Are we in a position to trade short? Absolutely not. Why? Because we know we're going to get a third month of rise, right? We already know that. So by knowing that, alleviates you from making a bad decision, no matter what you see on the chart. You know they got to make a new high. Once they make that new high, then we can talk, right? Now let's look at the weekly, also the weekly move, what the market did this week. So on the weekly move, we had a previous 2 weeks of rise. So what were we expecting this week? A week of rise. This is how we knew the market was going to go up, right? We were waiting for the market to make a high of the week, excuse me, and then retrace down. And we did take, I don't know if we took, I don't even know. When trace taken this week? On AU, no trades this week. But there were a couple opportunities once it made the high and started to push down, right? But I know we were waiting for that change in character, break the structure retest, and we did not get it, right? We had a change here, right? Came up, retest that change, but did we get a BOS retest? No. So there was no trade, no retest, no entry, right? So with that being said, we already had 3 weeks of rise. So this week, am I expecting the week to end with a rise? No. But can the week go up and come down? Absolutely. Now let's think about that. Think about these rules right now. Think about how if the market goes up, so it makes a new high for the week but ends in a no net, right? That means that it was a no net week. But if it goes up and comes back down and ends in a no net, that means it followed the 3-week rule and it followed the monthly rule. Why? Because if it makes a new high for the week, that means it made a new high for the month, and then it started to pull back down to continue the true directions of the market makers trend, right? So just think about that. These are things that when you're trading, you have to be on top of. You have to be putting these pieces to these puzzles together because they're leaving us breadcrumbs. It's up to you to understand what these breadcrumbs are, right? It's up to you to really gauge, what's really happening and what they're doing, right? So these are things that I'm already, the storyline, my confluences, right, are starting to, me put them together. And now that I understand what I'm supposed to see, if they confirm these confluences and trigger these confluences and align with them, right, then I know I'm in the right segment of the market. And if I'm in the right segment of the market, then I know that I'm in the right places to be trading. But I can't just go roll the dice and yo, I don't know what's happening, but I feel like I'm gonna take a long today. That's not trading. That's called gambling, right? A trader is a person who's analyzing charts and making decisions based on what they analyze and giving themselves a higher probability, to make money. So is it a form of gambling? Some people will say it is. You know, there is a place that there is a thin line between trading and gambling, a very thin line, super thin, right? And some people cross it from time to time, right? I take some gambles from time to time. There's no doubt about that. With type stop losses. So we already got this set in place. So we know we're counter 3 weeks. So we are expecting price to give us a no net or a drop this week, not a rise. And that's that. So let's go to EURCAD. We're looking at none of that today. We're not looking at this today. So let's go to the daily. So let's take a look where we are with in the pattern. So right now we are still in V1, right? Price went to the top of V1, then pulled away, right? And again, what I was saying about market structure, what type of market structure you in right here? Consolidation. So consolidation has a high and has a low. Just a reminder, make sure to join the Discord. Yep, to be eligible for the prop firm challenge. Facts. So again, I'm going to say it again. Thank you for the reminder, Mr. Lewis. So we do have a prop firm challenge this month of December, right? You get a chance to win a free challenge, provided by us, for funded pips. And in order to join the entry, you need to be a subscriber to the YouTube channel and also a member of our Discord, which is free. Everything is free. We're not charging anything. So you know, think about how you could start the new year with a free challenge that could set your new year off in a good direction, in a good trend. Remember, the trend is your friend, so get on the trend. So, like I was saying, guys, so remember we were going over market structure, consolidation structure, right? The market is moving up and down with no set direction, like it's happening right here. So you know that in consolidation, the price is consolidating. It has a top and it has a bottom, right? If we understand that the price is moving up and it just has a pit stop, if we're in consolidation, should we be taking trades off A or off B? Question. A or B? Let's see. Answer that in the chat. Let's see. A or B? Trend is up. What's the safest place to take trades? Off A or off B? Once you understand the market maker's pattern. Let's see. Answer that in the chat, guys. A or B? How many people answer? We got 7 people in here. And if you don't know, just put a question mark. That's okay though, not to know. Jumper got B. Cristiano got B. There's 9 people in there. If you don't know, just put a question mark. That's cool. It's okay not to know, right? The hard thing is to think that you know, right? So if you think that you know, B, 4. 3 people says B out of 9. 6 people are unsure or don't want to answer, or maybe can't answer, because if you watch it from your phone, the chat doesn't come up unless you put that you want to view from that you want to view as a desktop, not the mobile site, desktop site instead of mobile. So that's a trick for you guys. So the correct answer is B, right? So you guys are good, right? Why B? Because you want to get in on the lows, right? If prices move pushing up, you want to get in on the lows. You want to get in on all the lows going up. You don't want to get in on the top going down, right? Because you want to follow the trend. The trend is your friend. So you want to get in on all the lows of the consolidation when it's pushing up. When it's moving down, where you want to get in? All the highs. Notice how it wicks the highs and then pushes down. These are the the best places to trend. Look how fast price moves from those highs, and look how slow it goes to those highs. Right? There's a reason why. Just think about what I just said. Why did price move so fast down, but then when it goes up real slow? I call that a kiss of death. Why? Because you really believe, oh, the price is going down. It has a change of character here, right? Look, change of character. It's going to go up. And then what they do, you take a long and they'll whop, take you out. That's what's up, Meek. Welcome to the stream, my brother. Thank you for being honest, and I just gave you the answer, right? These are learning opportunities, my brother. The only way to really learn is to engage. Right? Just think about us. We were in school. Most of us did not engage in school. We sat in the back of the class. We didn't pay attention. We were class clowns. We were hollering at the girls, right? But here, you know that, damn, if I would have just asked a couple of questions, I would have never stayed confused. So maybe if I, answer a question and maybe got it, wrong, right? It gives me a opportunity to learn. Because the only way you can learn is by getting shit wrong sometimes, right? You gotta take some L's, right? And the L's to me are not losses, they're lessons. You gotta get your lessons the way you get them, right? So shout out to Meek, yo. Thank you for that, Meek. So yeah, guys. So with that being said, just to backtrack what we were saying just now, just notice how price pushes away from those highs faster than it pushes away from the lows, right? That's one, breadcrumb in the chart that will let you understand, let you see that, hey, um, you know, what side of the market is the true market direction, right? Just by seeing how fast they're moving for certain places, you kind of get a chance to gauge where you are, right? So these are little hints, little tricks, that you guys should be writing down if you have a notebook. If you don't have a notebook, get a notebook, bring a notebook to our lives because we do drop gems. It's not just, oh, I click here, and we do not explain. No, I think we over explain sometimes, right? That's what I think. We over explain sometimes. But, you know, there's a lot of gems in all our recordings, so make sure to go back and watch them, the free ones on YouTube. So, guys, so right now, we pushing back down. So me as a trader, what am I looking for? I'm looking for price to get back down to the bottom of the zone, right? And if we go to our daily zones, you best believe that that's marked, right? Bottom of my zone, right? Some people will call this the support level, but I know you had a whole bunch of different support levels, but this is one level that's from the past. I know all that stuff. Yeah, I got you, bro. Right? So this is the bottom of the zone that we're looking for price to come back down to, right? If it does, because price could easily just be doing this right here to push up, right? But we need to wait for price to have that break in structure, but literally break out of here, the top of the zone, for us to know that price is continuing that trend to the top side, right? So there's different places, points of interest that we're looking for to come up with our conclusion the price is moving up, guys. And right now, price is retracing down, right? So let's continue this check down. So let's take a look at our monthly move, right? What did price do last month, right? Price started here and ended here, right? So price technically made a no net, right? No net means no net change. The price just consolidated, meaning went up, went down, ended in the same place that it started for the month, right? So let's take a look at our market structure for the daily time frame, right? Again, notice how higher high, higher low, right? Slight high, equal low, higher high, right? Equal low, lower high, right? Notice how it's not higher high, higher low. So again, that structural pattern is going to give you what? Should already have an alert. Should already be like in your mind that, hey, I'm not in a higher high, higher low. I'm not in a lower low, lower high. I'm in a combination of everything. I'm in chop. I'm in consolidation. Right? Again, these are the things. This is the conversation that should be happening in your head. Right? And there's nothing wrong with having this conversation in your head. Because again, as a trader, this is a lonely sport, right? You don't have a team. You're only as good, you know, they say you're only as good as your team. No, you're only as good as yourself here, right? This is one of the reasons why I like this, right? Because sometimes, depending on people, as we all know, people let us down. But will you let yourself down? It'd be tough for you to let yourself down. You know, it's a tough pill to swallow, right? You gotta look at yourself in the mirror and blame yourself, right? That's tough. Pointing the finger at somebody else when you got three fingers pointing back at you, that's easy. But looking in the mirror and going like this, it's all me, that's tough. That's tough, right? So trading is a tough sport because it's all on you, right? So this is why you've got to make sure that you're having those conversations internally, or it's similar to having your game plan written down and having those questions that you need to be asking yourself when you step up to the chart, right? So these are the things, right? So boom. So we still in V1. Right now we're going back, right? Let's take a look at our 4 hour. Let's take a look at our weekly move. Let's see where we are with the weeks, right? So we previously had a 3 weeks of rise drop, and then this week we have a drop, right? So right now we have 2 weeks of drop. It's perfect. Now let's start to put the whole picture together, right? We had a 2 weeks of drop. The market is going up. Just looking at market structure, right? What's the possibility, the probability, not possibility, use probability that the market right now has decided, right, to break that high, make a higher high, right, push back 3 weeks for the higher low to then turn around and continue going up and break. That's a huge possibility, the fact that we've been chopping this whole time, right? Just like there's a possibility that the price could just be moving down to go back down, right? These are two possibilities that could happen, right? And this is where, from our many lessons today, that we're looking for a change of character, right? Because in the internal structure here, price is giving us lower low, lower high, lower low, lower high, lower lows, lower highs, right? Until we get to a place that price would change and start creating higher highs, higher lows, change of character, higher highs, higher lows, break a structure, retest, higher high, higher low, break a structure, retest, right? So this is the sequence. Again, these are the sequences when it comes to price action, right? So right now, price is retracing back down. We had a previous 2 weeks of drop, right? After 3 weeks of drop, the market must chop or rise. So this week, the market could easily be setting the low, could set the low, right? The higher low for the daily chart to then start the price to change in the internal structure, which is the 30, the 4, and then to switch back with the daily, right? So, you know, right now this is definitely a pair that we want to take a we want to, you know, zone in onto, you know, hone in onto this week and wait for the week to create that weekly low, right? If you guys were in the class this week, you guys will know what an anchor looks like because I went over anchors 3 different days this week, right? I drew them out on the screen. I'm not gonna do them on this class. So we wait for that weekly anchor to be set. Once that anchor is set, we know that the price is gonna move to the next direction, right? To the opposite direction. So right now the direction is down, but it's very short term. We don't want to trade short-term downs. Why? Because you guys notice that when you trade with the trend, what happens? The price just moves fast to that direction. So we want those fast movement into the direction. We don't want to go opposite way, right? Again, notice here, right? When the price is moving up, it moves fast, moves fast, moves fast. When the price is moving down, the retrace is slow, right? This was a pretty moderate retracement, you know, pretty moderate retracement, but look how fast it moved up, right? So we want to be in those fast movement. Look at here, price went up fast, retrace was slow going down. Price went fast, retrace slow going down, right? This pullback was very slow, but moved fast up, right? So we want to be in those fast movements, right? So this is why, again, market structure is key in trading, bro. If you haven't spent time in market structure, put it in that time and that work into market structure, you're really not understanding everything that's happening in these charts. That's a fact, right? If no one has ever told you that, I'm telling you that right now. That's one of the key things you must put in that time to understand, right? It's market structure. Not everything else, not support or resistance and all that other shit. Nah, market structure. Market structure. Remember, market structure taps the support and resistance places, right? Order blocks, fair value gaps. Market structures are things that's dictating where all these things are going, right? These are just places that the market is going to retrace to make that lower low, right? To this make that higher high, or and things of that nature. So just keep that in mind. Market structure is key in this game. That's the foundation to technical analysis is market structure. So if you're a technical analysis trader, you're not, trying to master market structure, you're moving backwards, kid. Just keeping it real with you. You're moving backwards. You're hustling backwards. True story. So yeah, like I was saying, so putting the story together, right? So we started to put our story together. We got it pretty good, right? Now let's look at our 4-hour market structure, right? We were moving higher high, higher low, higher high, higher low, higher high, right? Now, question. Let's ask another question, right? Do we have a change of character here to the downside from the 4-hour chart? Yes or no? Right? Do we have a change of character here? Right? We had higher potential higher low that was set. Price looks like it's changed to the bottom side. Do we have a change of character on the 4-hour chart? Yes or no? Y or N? Let's go. Let's answer that in the chat. Y or N? Y or N? Folks says yes. We got a yes. Let's go. Who else? And this is a key learning lesson right here that we're about to go through. Didn't create a new high. Okay. That's good observation. Jumper says no. Broke the low. All right. Let's go. Who else? How many people are here? Come on, guys. Come on, me. Try. And if you don't know, just put a question mark. That's okay. I'm going to explain that. Why it's okay to put a question mark, to have questions, especially in trading. Especially in trading. Let's go. Who else? Who else? Who else? Let's go. 30 seconds to answer. And while you guys are answering, I'm going to explain to you why it's okay to have a question mark in trading. It's okay not to know in trading. When you step up to the chart and you don't know, that's a good thing. Because when you trade, there's 3 different things you can do, right? They tell you there's 2. They tell you can only buy or sell. That's not true. That's not true. Don't listen to anyone who tells you there's only 2 things you can do in the market. You can buy or sell. That's absolutely false. That is a lie. You can buy, sell, or stay out. Those are 3 things. There's actually 3 things you can do. You can buy, sell, or stay out, right? If you don't have a conviction on why you're taking a trade, you use option number 3. You stay out. Because when you're not using option number 3, that's when you're gambling, right? When you take a buy, you take a sell, you should have enough confluences, enough confirmation for you to feel good that that buy or that sell is intact and you good. But if you don't have that confidence, you use option number 3. You stay out. Thank you, me. Good answer again. Great answer. I think out of every answer that we were given, to keep it real with you, that's the best answer you can give yourself. Because remember, trading is about risk management. And you're not going to be risking what you don't know. Again, no, we have to understand the psychology between trading and gambling. If you don't know and you stay out, that is a trader. That's someone who's trading. If you think you know and you're getting in, that's someone who's gambling because you think you know. Someone who has confirmed different confluences, right, is a probability is using probability to their favor. Now that's a trader. Notice the difference between the 3. I just gave you 3 examples, right? You got to figure out where you fit in. Which one are you using the most? Are you using confluences to gain higher probability that your trades are good, or you just thinking that you know and you're taking a trade? Or if you don't know, you asking questions, and if you ask questions, That's okay, because now you're stepping back and you're observing and you're waiting for your trading conditions to line up for your probabilities to get higher, so then you can take a trade and now you're a trader. Congratulations, Mr. Beak. That's exactly what you're supposed to be doing as a trader, Meek. Right? I know Mr. Jumper and Mr. Foe, right? They're both, in the class. So Mr. Foe, he's actually learning market structure now, right? So that's, he's answering the question to the best of his ability thus far, right? And so is Jumper, right? Daddy and daughter time. Based on the 4 hour, I believe it is still has not broken the low. I will wait for price to pass down the higher low on that 800. Bingo. Right? That's the, he gave us, you know, Mr. Jumper is correct. Mr. Meek is definitely correct. And Daddy Daughter Time is definitely correct also. Right? So there's a couple reasons, right? Now, folk, pay attention. You know, good job anyway. This is not a L. This is a lesson. Remember, this is a lesson. That's the place. That is. Oh, this is Pedro. What's up, Pedro? What's going on, my brother? Pedro is another one of our students. So, he explained that so elegantly. So, the correct answer is what he said. That's what's up, my brother. Happy to see you, man. Happy to see you. Happy to see you active, bro. You've been quiet. I know it's holiday season, and like you said, daddy daughter time, right? Look at this. So I already know. I already know. So but welcome, man. Happy to see you. So yeah, guys. So like Mr. Pedro, daddy daughter time just explained, he's absolutely right. Right? Why? Because remember that it has to break the previous either higher low structure or lower high structure to be a change of character, right? This is the higher high, this is the higher low, this is the higher high, right? So price either has to break below here to cause a change of character or break above here to cause a break of structure. And this is why our 4 hour zones are set up that way. So you should write that down, folks. In order for the price to have a change of character or a break of structure, it needs to break the previous, right, on an uptrend is the higher low for it to have a change of character. Previous, make sure you have that word in there, previous, right? Higher high, higher low, higher high. Even though this is a higher low, you may have written this as a higher low, right? The true higher low is the previous from this higher high. What's the previous higher low? It's down here. From this higher high, what's the previous higher low? Down here, right? This is not the previous higher low. This is not a previous higher low. Previous is what's happening in the past. So write that down. And on the uptrend, it needs to be the previous lower high. No, lower high. No, lower low. I'm confused. I'm confusing myself right now. Right? The previous, no, it's the previous higher low. I'm sorry. Erase that. Lower high. The previous lower high. Previous lower high. I 100% apologize. Sorry about that. There you go. Previous lower high. Thank you. I'm confusing myself right now. Trying to move too fast. Trying to explain things. I had another thought while that was happening. Um, so in this example, again, the change of character will happen here, not up here, folks. So all you guys, make sure you guys write that down. That's the gem right there. Right? Everything that's happening inside of here is internal structure. Right? The internal structure of a 4 hour chart, for me, the way I trade, is the 30-minute structure. Right? Which again, the 30-minute structure, we cover that in our daily live session this Monday through Thursday at 7 p.m. New York time. right? So make sure of that, right? So thanks for participating. I'm gonna try this a couple times, right, if I can. And definitely Meek, good job, my brother. You don't understand how much that mentality and that behavior that you experienced the past two times, it's a trader's mindset. It's not a gambler's mindset. It's a trader's mindset. So good job. Good job. And those of you who are in the stream that's not answering that thought the same thing, good job too. Just participate, bro. Just participate. Let's see. What's up, Steve? What's going on, my brother? Internal structure gems. Pay attention, traders. You see that? Gems. All right. So let's continue. So now we're waiting for price, to either decide whether it's going to break down here or create a higher low, right? To then continue the trend up, which is what the expectation is, right? Remember the whole picture, the puzzle, right? We had a previous 3 weeks. What we expecting? Price to give us a weekly low, anchor, maybe around the 800, like Pedro said, create a new weekly low, and then from here, start the party to start pushing up to create the higher high, higher low of the what? Of the daily. Create this to go down to then continue to go up, right? So, market structure in essence, right? It's like gears, right? All the gears, they work together, right? The teeth of the gears work together, right? But you have bigger gears and you have smaller gears, right? The bigger gear is a daily chart. The medium gear is the 4-hour chart. A smaller gear is a 30-minute chart. And then the smallest gears, just think about a watch, a fine timepiece has a whole bunch of little circle gears all working together to tell time, right? This is trading. Whole bunch of different gears working together for you to tell time, what time it is. Either time to trade or time to chill, right? So just think about that. So that's a good thing, guys. So great participation. This is what makes teaching fun. Teaching ain't fun when you're the one just speaking and you just talking. That shit ain't fun. If you think that's fun, that's somebody who got an ego to stroke. But I like when you guys participate, right? Because it makes it interactive. It makes it fun for everyone, right? So let's continue. So now, again, what's the expectation for the week? We already know. Price push down to then pull up. So you write that down in your trading journal, right? The expectation of the week for that pair. We already went over what, 2 pairs, I think? 3 pairs. That's where we are. So we have a good 4-hour zone is still intact. So we know where a bottom of our zone is, right? Price reaches the bottom of our zone, what we're expecting in consolidation levels at the bottom of zones for price to push up. So that's a good place for us to be looking for entries, right? Because we're getting there, right? But it's going to take a day or two. So relax. It's just Sunday, Monday. Euro USD. Euro USD. All right, let's take all this out. Let's focus on the MMP, right? Notice how it's just a repeatable pattern, right? Trend, consolidation, trend, consolidation, trend, M formation, peak high, whatever you want to name, right? And then trend, consolidation, trend, consolidation, trend, right? Change the character, right? Trend, consolidation, right? Gems on top of gems, bro. Gems on top of gems. So where are we right now? We're in V1 on the way up. How do we know we're in V1? Again, reading price action and market structure is key. We had higher high, higher low, higher high, higher low, right? Higher high, higher low, higher high, equal low, right? Didn't break out, equal high, higher low, lower high, higher low, higher high, lower low, right? Notice how there's no set sequence. It wasn't like here, higher high, higher low, higher high, higher low. Here it's just a little bit of everything. A little bit of everything lets us know where are we? We in chop, right? And that we can see that when we do in our daily market structure, right? We just had a free up, down, and then down, right? So internally is a little bit more details than the external, which is this big one, right? So, but right now we know we in V1, right? Now, what is the zone that we're trading? Right, we need to find our zone. We're trading between these lows and this high. So when price breaks above that high, we know the price continues the pattern and it's continuing and it's going to be continuing that higher high, higher low pattern on the daily chart, right? Again, notice how once that low is set, price bounced one time, two times, three times, four times, five times, six times, seven times, eight times, right? Before pushing up, right? So we know that this level of support or bottom, you know, we know that this is the place, right? The bottom of our daily zone, right? So, yeah, reminder to all you new viewers, we are giving a prop firm giveaway for December for Christmas. In order to qualify, you just have to be a subscriber to this channel and also a member of our Discord, which both of them are free. Doesn't cost you nothing, right? And the winner will be, we're gonna do the live drawing on Christmas Day live, and it's not gonna be paper and people names on piece of paper. No, we're gonna use that website that they do the drawing, so everyone gets a chance to see it, and there's no favoritism or cherry pick. It's it's a thank you for you guys, and again, like I was saying before, is just think about how you could start off 2024 on the right foot, right? Life changing. So make sure to join. So continuing on, thank you for that small break. So now that we see that, we know our zones. What's the next thing? A 4-hour market structure, right? And a 4-hour zone. So right now we in this market structure, right? Price is moving up, moving down, right? We had a change of character here on the 4-hour, right? And price started to push up, creating higher highs, higher lows, higher highs, higher lows, higher highs, equal low, right? What's the next sequence? Higher high, right? So let's look at our weekly moves. Last week gave us a rise drop. Perfect. We knew that was going to happen. We knew we were going to get a new rise. We did. We got a rise, right? And we got a drop, right? So this is the variations to the 3 days, 3 weeks, 3 months, rise drop, right? We didn't get a set rise. We got a rise drop. So there is a huge possibility that this week will continue to rise, right? If we get a 3 days of rise and we got a rise drop, the next day is either rise. It could be either one of the three. It could be a rise, it could be a drop, or it could be a no net. But the fact that we rose and we dropped, there's a higher possibility that we'll have a rise for this week, right? That doesn't mean that, oh man, I'm going to start trading long right away. No, we need to see the internal change of characters and time frames in the lower time frame, and after change of character, we need to see a what? We need to see a BOS retest for us to have a confirmed, the most confirmed market structure entry you can take is that combination. You need to see a change of character. You need to see a break of structure retest. You need to see those two things. An aggressive trader would just look, see a change of character and just take it at the change of character. Pullback, right? A more conservative trader will wait for not only the change of character, but that extra layer of confirmation, which will be the break of structure retest. So you have two trading entry personalities, aggressive or conservative, right? Yeah, a more aggressive trader potentially can make more, correct? But again, you're at a higher risk tolerance, right? Because you have less confirmations. The more confirmation you have, the lower the risk and the higher the probability. The least amount of confirmation, the higher the risk, the lower the probability. So remember, trading is a game of probabilities. You got to give yourself probability. You have to have the odds, not the odds, because that's gambling. You have to have enough confluences to build a case for your probability that you in the right side of the market starts to get higher and higher and higher. No confirmations, zero probabilities. Two confirmation, maybe 40% probability. Four confirmation, now you have 60% probability. Or 80% probability, right? The more confluences, the more confirmation, the higher the probability is that you are correct. So you have to create a trading plan that has a lot of different, confluences or things that we'll need to check out, because the more that checks out, the higher the probability that you are correct. So that's what trading is all about. And the problem is with trading is that everyone has a piece of the puzzle. This guy is great at this probability check. This guy is great at this probability check. This guy is great at this probability check. You know, but that's why I study so many different things, right? To make sure that, just like religion, not one religion has the answers, right? Because everyone, I don't want to bring it there, but everyone is praying to what they believe is the same thing, the Most High, God, the Creator, whatever you want, Allah, whatever you want to name Him. But at the end of the day, everyone's doing similar things. Christianity believes that, killing to take is good. Muslim believes that if you fuck with me, Allah gives me, gives me strength to fuck with you back, right? You can't just hit me and I'm not gonna hit you, right? So, you know, so this one says this one says that, right? But who's right, right? One thing's for sure: somebody mess with you, you're gonna hit them back. That's just the way. That's just the way it works, right? Our moms and our dads taught us that. You better not come home hit, right? We all had that when we were little, all of us, especially if you were men. You better not come. You a punk. You better not come home hit. I leave, right? So that's off topic, but let's get back to work. So with this being said, we're expecting price. We have a nice place the price could start retracing back up. So we need to see that. So let's take a look at our 4-hour zone so we know where we're trading in between what, right? So we did have a break of the previous high from last week. So now that we had a break of the previous high, what was the push that caused that break, right? Price pushed from here, right? So this becomes the bottom. And what was the high? This is the high. So right now we can see that price is literally chopping and consolidating between here and here, right? So we expecting all this. So where will be the perfect places to find entries? The lows, right? To go up. All right. So we're in the right place. The price is where we need it to be at. Just because the price is where we need it to be at, that doesn't mean we're going to take an entry right now. There's other confluences that have to happen in lower time frames, right? And again, for you guys to reap the benefits of those confluences, make sure you join our daily market breakdowns, which is at 7 p.m. Monday through Thursday, that's what we go over. And then to get the entry, right? The entry process and how we look for entries, join the early morning live trading session that Mr. Jumper does. And you get to see again the mindset and the questions you should be asking yourself and the trading plan for you to gain these entries, right? So this is a good one for the week also, right? I forgot, let's put these green. This was a good one also to watch. AU was 3 weeks of rise, also a good one to watch, right? So good ones to watch for the week. Take all this out, go back to the daily. Let's take a look at everything all over again. Again, this is the weekly breakdown to build the trading plan, right? So GJ, we are on what, level 3 rise, right? So this is why we see what type of behavior, higher highs, right? All these from down here, right? Higher high, higher low, 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 right? Push, we broke this high, we got another high, right? Internally, what can we see? We had a change of character here, right? We have higher high equal low, lower high equal low, higher high, higher low, higher high, higher low, equal high, right? I get a higher low to keep pushing up, right? So notice how the external is intact with the internal to let us know that, hey, the market direction, we have a confirmation. We also see the prices above the 800, and we can see that the 800 is singling like 1 o'clock. What I mean by that is, if I were to put a circle here, or let's use this time. It's more like 2 o'clock, right? What time is? What time it is? If you ever hear me ask what time it is, this is what I mean. If you ever hear me ask you guys what time it is on a live class or on the Discord chat, what time it is, that should already. Oh, let me go check the 800. Right? If the 800 is pushing up 2 o'clock or 1 o'clock, 1 o'clock is even steeper, letting you know that hey, we're pushing up. Right? This is 2 o'clock. Right? You already know 3 o'clock is moving sideways. 3 o'clock is what? Consolidation with the EMA. 5 o'clock is downtrend. 6 o'clock is steep downtrend, right? Because it's moving down, right? But you usually see just this. You see this, and you see 4, sometimes 5. Well, 4 o'clock is slight. 5 o'clock is real. 6 o'clock, you really don't see a 6 o'clock. Oh, MSN, what's that? So, what time it is? Right now it's 2 o'clock. Market's still pushing up. Now, right now we had 2 months of rise. Perfect. Woo-hoo. Instagram traders gonna take this and start adding emojis to their to the chart. That's funny as fuck. It's all good, man. Somebody gotta get something from somebody, bro. We ain't creating nothing. We're just discovering. Nothing in this world you are created of. You are just a discovery of what was already here. So all these things was already in front of us. We didn't discover the charts. I mean, we didn't invent the chart. We discovered the charts. We discovered these patterns. We discover what candlesticks means. We discover what market structure. Everything is a discovery. So they had to discover it for somebody. I could be the Christopher Columbus, right? So it's all love. I have gotten so much from the community, right? And if you guys were in the chat before, when I got into trading 9 years ago, the community was not what it was now, bro. Every man for themselves kind of thing, because it was not social media was not out like it is now. The accessibility to information, there was not enough information out there for you to have access to. Not like now. Now you have so much access. You guys are in, you know, this is one of the best times for human beings to live in. Just so you guys know, you guys might not think so, but it's absolutely true. And why? Because we have accessibility to information. Back in the day, we didn't have accessibility to information, right? Just think about it. I grew up with libraries. You guys probably, if you guys are below 25, you guys probably don't even know what a Dewey Decimal System is, right? So, I grew up with libraries before internet. When you needed to learn something, you had to go to the library, you had to go look for that shit. Right now, all you got to do is go to google.com, type it in, and it gives it right to you, right? We didn't have that. So the accessibility, and remember, before libraries only like kings and queens and churches had libraries, and you didn't have access to go into there. So the only information you knew was what the hierarchy wanted to give you, right? So it was not like that. And if you come from certain countries, your literature, your magazines, your books, and everything, they were controlled by the government. And if you were caught, reading a book that was not approved by the government, you go to jail, or they'll kill you, right? More than likely, depending on what year that was, you went to jail, right? So going to jail is killing your spirit regardless. So, well, anybody follow Instagram trader doing some joke? Yeah, nah, man, not every Instagram trader is bad, yo. So let's not just bash Instagram traders, right? That's not every Instagram trader is bad, right? But you have those, man, like anything else, right? So let's get back to this, right? But just think about what I just said. So we have 2 months of rise. What does that tell us? That tells us this month is what? Like you said, word facts. See, so 2 months of rise. What does that tell us already? Remember, we're building our game plan for the month. GJ, we already know we're gonna get another month of rise, right? Because after we need 3 months of rise, right? If you have two, you're gonna get the third one, right? And again, historically speaking, you could go back, right? You can see it here, 1, 2, you got a third one, right? If there's no 1, 2, I want to see 1, 2 because I know I'm gonna get a third one. Now that doesn't mean I'm gonna take a trade right now. right? Remember, we have to have the low of the month set, right? And then the prices start pushing up, right? So we just get in a game plan. We know that this month we should be looking for longs. Boom, perfect. Now let's take a look at our daily market structure, right? Facts, higher highs, higher lows, higher highs, higher lows, right? And we're at this top, right? We're expecting price to break out of this top, right? Let's take a look at our daily zone. Bam, we had the daily zone, right? Price broke out of the daily zone, created a higher low, create another higher high. So right now we at a good place for a higher low point to continue higher high, and that's our 4-hour market structure, right? So we drop to the 4. Notice how we put it in all together. So right now we have in the 4-hour, it's not really a break, it's a retest, right? But what's our 4-hour trading zone? Boom, we're between here, right? So right now price is trading between there. Price tapped the high, didn't break the high because this is not a break, retest, right? We need to see a full candle closure. Second candle cannot touch the zone for it to be a true break of structure, right? So right now we're just sitting over here. So internally, right, on our 30-minute time frame, right, we will have a more condensed zone. This is a 4-hour zone. We will have a 30-minute zone, which is smaller than this 4-hour. And this is why you guys need to join the 7 p.m. daily market breakdown, right? Because there's where we go into the lower time frames. Remember, in this class right now, it's just daily and weekly. I mean, daily and 4-hour. The other classes are lower time frames, right? Again, that's the only way you're going to put the whole thing together, right? Because everyone's going to give you one piece, one breadcrumb, and then say, in order for you to know the rest, you got to join my $2,000 course. I ain't go front. I'm like that too. So you want, and there's nothing wrong with that, right? I don't see anything wrong with that, to keep it real with you guys. Why? Because it took us people who have been in this game for so long. You know, not everyone. I wouldn't say that everyone deserves that type of bread, but people who's been in this game for so long, you have to understand the amount of man hours you put in, the investment that that person did for their trading knowledge, whether they paid mentors, paid courses, right? And also time is money. So if you invested, how much your time's worth? You get paid for time at your job, right? If you have a job, you're getting paid for time. So you have to understand that our time is actually has to be worth something, right? It can't be just free time, right? You don't go to work for free. You didn't go to school to learn something so later you get paid for free. You didn't become a specialist in something for you to work for free. You didn't do that. So you can't expect a trader to do that too, or a mentor. But not everyone. Again, I'm playing devil's advocate here. Not everyone, right? So let's take a look at our weekly move. So we had a previous 2 weeks of rise. We had a rise here, right? Then we had a rise here, right? Now you may ask, wow, but why we didn't get a rise here, right? Because we got a gap. Remember, if you're in our daily trading room, you will know the gaps are what resets. So if there's a specific move that you're waiting for and you see a gap, that move is null and void, is a voided move. Why? Because they gapped you. Gap reset. So they reset the game plan. And if they reset the game plan, that's okay. Remember, we follow them, right? They leave breadcrumbs on the chart, and when you have accumulated enough information for you to know these breadcrumbs, what happens? You're not gonna get fucked over, right? And this is what I tell you: everyone got a piece of the puzzle, right? Some of us got more pieces than others, right? I don't have all the pieces. I see somebody doing something. I want to know what they do. Ah, yeah, I already seen that before. Oh no, this is interesting. Let me dissect this a little bit further. What's up, Steve? Good to also look at the 12 month candle to see how the pattern is looking as we are going into a new 12 months candle come January. That's a fact. January, what you think, Eric? Or is it too far out? Um, what I honestly think about that is that, as the type of traders that we are, since we're day trading, right? Looking that far in the future, or trying to analyze that far in the future, for me, do I see any benefit of it on my daily entries and exits? I don't see it, right? Because it's so far out. This is a good question, guys, right? But is at the beginning of the year, is it a good place for me to start to know where I should see the end of the year, right? Because just like anything, right? If the end of the year we're expecting the price to continue to go up, we know that they're gonna set a yearly low before the price continues to push us up, right? But I'm not that type of a long-term trader, right? For me to look at that. But we'll take a look at it, at least for me. For some people, it's a good thing, right? If we're just looking at this monthly candle or not monthly, we need more, 12 months, right? Looking at this 12 months candle, right? What can I see, right? I can see, and look, like I can read this, right? This is a good thing though. I can read this because I see three pushes to the top, right? After three pushes to the top, what am I expecting? I'm expecting price to push back down, right? And how do we know that? Again, this is not we're guessing or we're telling you, right? Trading is about the past, present, future, right? This is where we are now. This is the present. I need to analyze the past to know what the future may hold, probability. So let's look at this. Three green candles, right? Three um, years of rise, right? In this situation, let's go back and look at 3 years of rise and what happens after 3 years of rise. 1 year, 2 year, 3 year, next candle is what? Red, right? 1 year, 2 year, 3 year, next candle is what? Red. 1 year, 2 year, 3 year, next candle is what? Red, right? So we're not just telling you these things like, oh man, no, these guys, no. Stephen and I, just so you guys know, Stephen and I, we cut for the same cloth. Him and I are cut from the same cloth, same first mentor and stuff like that. So, he asked a good question to give you guys some insight, right? But this is an indicator that you can gauge what next year holds, right? You can start gauging, hey, next year I see what happened in the past. I know where I'm at the present. What could the future hold? This is what the future can hold. Now, another good thing about that, does that fall into our overall market makers bias? Absolutely. There's no doubt about that. Which is what? Folk, talk to them. We're reaching peak high. What happens after a peak high? Cristiano, what happens after a peak high? You guys know the answer. So that right there is just helping us put together the whole pieces of the puzzle. Remember this, you need confluences, guys. Confluences, you need convictions, you need confirmations. Head and shoulders information. No, that's the formation at the top. But what happens after peak high? Those are great answers. Both of those are good answers. That's exactly the formation. Lower low, lower high. Correct. There you go, Mr. Pedro. Price after peak high comes what? L1D, level one drop, right? So we make a peak high, the beginning of the year, then price will do what? Start turning around, right? Go down. Exactly, folks. You see that? Marwan, right? Just call your name, Marwan, right? So these are the things. So put in, looking at all these charts, again, remember, this is gears. All these gears are working together, right? You have to know what chart you got to look for what you use what chart for. Now, if we were long-term traders, right? We was institutional traders that our stop losses is, 5,000 pips. Absolutely, we'll use a 12 months chart to gauge the market because that's where we're going to look for our entries and exits. But the fact that we're day traders and we're looking for, short-term entries and exits, you know, um, is something that, it's not that it's a make or break type of situation not to look at, but look how we just used it to gauge our overall bias of our market makers pattern, so we know exactly what to expect next year, which is what. Let's think about this. This whole uptrend pattern started in 2020, right? And we still moved up 3 years of rise, 4 years right now, right? Notice that. We had 3 green candles to let us know 3 years of rise, right? Why? Because we were in a peak low. We need to go all the way up to a peak high. It will take 3 years to go up to a peak high. Yo, this is fucking gems on top of gems, yo. For you guys who are understanding this. For the guys who are not understanding this, stick around, and with time you will get this. Like everyone else. With time you will get this. Mr. Cristiano, he's been with us for 3 months and he is getting it. Right? Fo has been with us for a couple of weeks. He is getting it. Right? And there's a lot of other people in the Discord. So make sure to join the Discord. The link in the description and also in the chat. Right? So with that being said, let's continue. So we had 2 months of rise. So we're expecting this month to finish as a rise, right? We're expecting a monthly low to be set for the continuation, right? Looking at price action, the way price is moving, the external and the internal, right? We had higher highs, higher lows, and right now we continue to make a higher high. The internal to that is what? The 4 hour. The 4 hours giving us what? Change of character, right? Higher highs, higher lows, higher, right? We're getting higher highs, higher lows type of pattern situation. We're not getting up, down, up, down. We're not getting chopped. We're getting uptrend, right? So now what's the game plan, right? When we look at the lower time frame, the internal to the 4 hour, we're looking for, lower lows, lower highs, lower lows, lower highs, higher high, change of character, higher low, higher high, break the structure, higher low retest. Now we entering. Bam! Sniper. Holla at me. Right? Once we see all these, right, the whole sequence play out. Right? So let's go to the 4, right? We're getting our sequence. Right? So let's update our market structure here. So now we know we up here, up here. Right? We're getting good structure. Right? This is a good thing. Next pair. This is another green. This is another good one to be looking at for the end of the year. GU. Let's take all this out. Notice how our entry was given on Friday. Now, flap, push straight up. Look at our zone, right? We don't get to that. Join the daily if you want more information about that. You want us to breakdown of that. 7 p.m. Monday through Thursday. Right? So GBPUSD. GU, where are we? We are in V1. How can we tell? Just look at market structure. High, high, low, high, high, low, then what? High, low, right? We starting to go into a chop. This is how we know we're in consolidation, right? Hint, right? Let's go back to this. What time it is? What time you got? What time's the clock right now? 3 o'clock, baby. Consolidation. 3 o'clock, baby. The 800 EMA is the most powerful and one of the most powerful indicators you can have on your chart. There's only 2 indicators we use in our group, but this is a powerful, powerful indicator once you understand what it's indicating to you, what it's showing you, right? So it's 3 o'clock, baby. We know what 3 o'clock is. We ain't dumb out here. 3 o'clock, baby. Just so happens that we are on 3 o'clock consolidation. What a coincidence. It's called confluence, right? So with that being said, let's continue. So let's look at our daily move. What happened? Our weekly move. No, monthly, right? My bad, monthly. First thing is to look at our monthly move, right? What do we have? We got a rise. That's perfect. What do we have right now? We have 2 months of rise. What is the game plan for GU for this month? We already got a game plan, baby. Not only do we have a game plan, we're sitting on the 800, and that's a place where market respects, right? That's a flip zone. Let's just leave it like that. That's a place the market flips. That's a flip zone, right? So we're right at a flip zone. Perfect. Let's look at our daily market structure, right? We were doing higher highs, higher lows. We thought the price broke out of the consolidation that was here, went right back down, right, to the zone, right, in the zone, and then it's looking like it's pushing up, right? So let's look at our daily zone right now. Trading zone is between this high and this low, right? Price did a retracement, right? And if you use fibs, This is a 78.6 just by the looks of it. 78.6 retracement, which is a PRZ, price reversal zone, for you guys who trade Fibonacci. What a coincidence. No, again, these are all confluences. Do I use fibs, guys? No. Why? Because I can see them without even putting this tool up, right? Just keeping it real with you. Do I use the actual tool? No, but I use the numbers to gauge. A lot of gems today. Too many gems, bro. I'm giving out so much free game the last week and starting today, today too. It's a lot of game, and it's okay, it's okay, I would say this: the community, you guys in the community, have given me so much. This is the least I can do, bro, and that's an honest truth from the bottom of my heart. Remember, when I first started, we didn't have this community. So you guys who are out there, all you other mentors, thank you. You guys are giving me so much. I got to give you guys back something. FR 2 page almost finished. What you mean? For real, 2 page almost finished. Almost finishes. What, you taking down notes? If you're taking down notes, my brother, you making sure that this free game, it's on, it's helping you out, bro. Shout outs to you too, Mr. Cristiano. Yes, sir. You got so many notes. And Cristiano, I approve your one-on-one for Tuesday. I don't know if you saw that. I approved that one-on-one for Tuesday. So we do have a one-on-one on Tuesday. Fo, I believe you have a one-on-one for Tuesday too. No, Fo is long, right? I'll be knowing your names, man. You guys, that's why, you guys screen names and stuff and real names. I get confused sometimes. So I believe it's us, folks. I'm not sure though, but I know I think I got 3 on Tuesday. I got Marwan. I don't know if Marwan you put yours in, Cristiano and Long. Fo, I think it's Fo. I'm not sure. So let's continue over here. So boom, we got 2 months of rise, so we know what the game plan for the month is. So off rip, I'm putting this green. Right, I need to go. I don't need to do much more because now I'm confirmed that I'm in line with the market makers. Right? Not only am I confirmed because we have 2 weeks. Let's use another confluence. Market structure. What type of market structure do we have? Boom. We had lower lows, lower highs, lower lows, lower highs, internal to the daily, right? We had a change of character that's let us know that we broke to the top side, right? We had a break of structure retest entry given on the money. Where are we? Higher, high, higher, low, higher, high. We already know, right? There's no guessing anymore on this pair. Well, there's never been any guesswork because we analyze charts, right? So let's take a look at our 4-hour zone. Previous 4-hour zone was here, right? Price broke out of that zone to create a high, right? What was the break that pushed? Was here. What's the new high? It's up here. So we're trading right now in between this 4-hour zone. Looking at the 4-hour moves, what do we have? We had a 3 weeks of high, right? As expected. This is why we went long this week here, right? We went long, we got in, boom. Now, this week, what's the expectation of the first week of the month, right? If you have studied what we have studied, the trap moves are set at the beginning of the month, end of the month, the beginning of the week, end of the week, the beginning of the day, and end of the day, the beginning of the session, and end of the session. That's where the traps are set, right? That's the textbook way to explain where the market is going to be trapping traders. We at the beginning of the month. Let's put that together, what I just said. The traps are set the beginning of the week, end of the week, beginning of the month, end of the month, beginning of the day, end of the day, beginning of the trading session, end of the trading session, right? So right now we're in the beginning of the month, and we are also in the beginning of the week. We had a previous 3 weeks of rise. After 3 weeks of rise, the market must do what? Chop or drop. Hello, hello, testing. All right, guys, can you hear me? I can see it. Hello, 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 hello. All right, we good. All right, so just let's start putting these things together, right? We at the beginning of the month and we're at the beginning of the week. We had a previous 3 weeks of rise. After the rules are after 3 weeks of rise, the market must chop or drop. So what am I expecting right now? I'm expecting price to go down. Why? Look at everything that we're putting together, right? Every confluence, everything. What is it telling us? It's telling us that hey, this is time for us to retrace before we continue. Now, if I'm the person who runs the show, right? In order for me to gain, somebody else got to lose. I gave you 3 weeks of continuous movement to a certain direction. I induced you and make you believe that the prices is up to force people to do what? Right? So I'm looking at all these things, and by seeing all these things, it's gonna help me make a good bias of what I should do if I'm just trading just regular rules without understanding the variations to the rules. So right now, the fact that we're at the beginning of the month, we need a monthly low before. Hello? We need a monthly low before a monthly high, right? We had 3 weeks of rise, just letting me know we need to pull back. So once we pull back, that will make a monthly low, and then we can continue. Hello, hello. You do, but it changes to another source. All right, let me see. Thank you for that. I don't know. I'm good now. All right. Let me plug in my headphones. These headphones, 8 minutes give me like 3 hours. That's what they're known for. So I plug them in for like a pair or two, and then I put those back. So we good. All right. If it starts working, Lewis, don't wait, man. Send me. Damn, you can't even. Yeah, send me a iMessage. I'll get it right on the computer, just in case. So I don't just ramble, because I'm not gonna keep looking at the OBS, the other screen. So guys, when I look down like this, because I'm looking at the other screen, I'm looking at the OBS screen. So yeah, so these things, we have to start to put these things together to understand the totality of price action, right? We understand the complete high is up here. So the target for the high of the week should be, or the high of the month should be up there. You know, monthly ADR is 466. So we should be expecting 466 pips, you know, from where we are the beginning of the month to the top side, right? 466 pips, right? So we got everything broken down. So yeah, this is another one I want to be looking at. Sorry, we already did it. We want to be looking at for the month, right? We pretty much gauge a good monthly game plan for this, right? So let's continue. We got a lot of good things in December. You know, some people say, "Whoa, December, yada yada yada." My audio again, doing the same thing. It's going in and out. I don't know. My phone. Let me turn off the Bluetooth on this. The Bluetooth is off here. Yeah, man, all the Bluetooths are off. My phone Bluetooth is off. I know that for a fact. It's low. You can hear it low. Damn, bro. It's that bullshit right now. It's my fault though. Should I charge my headphones? I charge my headphones maybe once a week, because they last so long you don't even be thinking. Let me see. I'm gonna take this off. All Bluetooths are off of all my devices. My iPad, my 2 iPhones. So if anything, it's just here. Is it still low? Because the OBS is showing the mic is
all the way up to 20 decibels. So it shows good audio. It's low. Alright, I'm gonna turn it up. Testing, testing, testing. Still low? Hello, 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 hello. Hello, hello. Is it still low? And it looks like it's like feedback on it too. Like there's feedback on the mic. So let's see. So alright guys, let's continue. Sorry about that, man. Don't worry, another five minutes. Maybe after this pair you'll see other headphones. My JBLs. Alright, so let's move to this. Let's turn all this off. 4 hour. Let's go to our daily. Let's start from the top. So where are we? What is this? Oh, from the class. So where are we? We in V2, right? How we know we in V2? We could just look at market structure and see, right? We can look at market structure and see. The 800, remember, what are indicators? Indicators, some static, yeah, I can see it. I can hear it. I can see it on the thing. Yeah. Sorry about the static, guys. You know, we gotta work with what we have for the time being. So yeah, so even though the EMA is letting us know that we're on an uptrend, right? That's a good thing. That's overall bias. We know that we're up, but right now we're in a consolidation zone, right? So just looking at the zone, right? We have a high, we have a low consolidation. You guys already know what you should be trading off the lows, right? Now, just looking at let's look at the monthly move first. So the monthly move, last month we had a monthly rise, and this month we had a monthly drop, right? Which is a good thing. Why? Because the way price action moves, right? We want what? Higher highs, higher lows, higher highs, higher lows to then give us a higher high, right? So right now on the daily, price action is looking good, right? Just looking at the daily zone, right? We're trading between these zones, right? Technically, we're trading between here now. I need to update that. We're trading between the lower consolidation and the high over there. So right now we're trading between this zone, right? Which we good to go over here. So notice how this zone corresponds with here also. Trading from that 800 level, right? So boom, let me bring this more to the side. Let me stretch this. Hold down shift, nope. Hold down command. So we're in between this zone, this high and this low. So now I'm going to drop down to my 4 hour. Look at my 4 hour structure, right? Right now we have this highs, these lows. We had a change of character on the 4 hour chart, right? To go to the downside, which is okay. Why? Because it doesn't matter. We need two things happening. We need a change of character, and we need a break of structure retest for a confirmation that we're moving down, right? We can see that right now we have these higher highs. We could be making a higher low, right? To continue to push to the higher high to break out of, you know, V2 to start L3R, level 3 rise, right? That's the sequence. So let's drop down to the 4, take a look a little bit more of the structure, seeing what's going on here. So we had the high here. Notice here, if you're trading and you're not waiting for the sequence, right? Break, what I thought this is higher high, higher low, higher high, higher low, higher high, higher low, and then what the price did, boom, took it away from you, right? Went down. This is why when you get to certain portions, you need to wait for the market to show their cards, give you their move, so you can make your move, right? Not the opposite. Right? If you're chasing, if you're trying to move ahead of them, you're gonna get fucked over. If you're moving with them, wait for them to make their move, then you make your move, then you're trading in line with them. Right? So right now we have to change the character here, not here, here. Right? Should I ask that question? Change the character, A or B? Right? So this is a why? Because remember, it's the previous, right? This is not previous. This is the high. What's the previous higher low? Here's the previous higher low, right? So we're in between here, right? So now, let's get our 4-hour zones together, right? So boom. So right now we changed on the 4-hour to go down, right? The 800 was violated. Not a problem, right? If you're taking early trades, what do we need? Change a character, break a structure, retest. Just because it touched the 800, did we get a change? Yeah, we got a change to the top. Did we get a break retest? No. No retest, no entry. This is why I tell you, you have aggressive entry, right? And then you have a conservative entry at the top, right? I like that conservative entry. Your probability is higher on that entry, right? You would have got stopped out. Break of structure went up, you were coming back for the change of character went up, you were coming back for that change of character retest, and what happened? Just ate right through it, right? It didn't happen. This is why I tell you guys what you guys should be waiting for, and be a little bit more conservative. And there's certain price points where you're gonna have an aggressive entry because of other confluences. But over here, this was a good place to take an aggressive entry. Right? This is a place where you would take an aggressive entry because where price is at. Previously, what happened? 3 weeks of drop, right? You had 3 weeks of drop. You were expecting, the low for the week to set for you to push up, right? That's what I was saying. That's what I was preaching, right? And this is where you will take an aggressive entry. And I believe I took this trade. I'm not 100% sure. Let me see entries. Did I take a trade here? No, I didn't take a trade. I did take a trade there. Didn't I take a trade there and broke even? I woke up in the middle. I went to sleep putting up the Christmas tree. And look, it took me the whole week to put up the Christmas tree because I'm tired. Right? So boom. So even if you took, I gotta answer this guy. This is the only person who could put me to answer. It's my princess.
Hi, Daddy.
What's up, beautiful? I was gonna call you when I finish class. What you up to?
Daddy, I got a haircut, Papi.
I gotta see it. It says camera is being used by another app.
Daddy?
Hold on, I can't see it. Hold on. Sorry, guys. This has to happen. Let me see. It says. There you go. Wow. Do you like it?
Yeah.
You're looking so beautiful. I like your rumper. Looks nice.
The boy back to the so I'm running over.
But let me finish this class. I'm gonna call you so I can take a good look at you.
Papi, we're literally leaving right now, and I just wanted to show you something.
You're looking so beautiful. Let me see it again. Hold on. Let me see it. Put your phone away. Wow. Looking so grown. I love you, baby. So call me when you get back because I need to talk to you. I was going to call you today.
Okay, bye-bye.
All right. I love you. Look at so big. Sorry about that. Had to, man. Like my brother from another over there. Daddy-daughter time. Has to happen, bro. It has to happen. Has to happen. So with this pair right now that we have 3 weeks to drop, right? What's the expectation? After 3 weeks of drop, the market must chop or rise. So right now, we're getting into the rise party, right? We're locked in now, right? To look for price to move up. And what do we need? Change your character, BOS, right? We need that whole sequence, not half, not part of it, not 5% of it. We want the whole sequence. And when we're looking at the daily, right, we can see that what type of structure is making. Higher high, right, higher low should be set while we had a previous 3 weeks. Now we need to start moving up to create that lower, higher low, higher high type sequence on the higher time frame. So this is another good one for us to be watching. Let's change this. Let's put this green. Almost everything is being watched this week. Now, US 30 is a little bit different, right? I personally do not trade market makers pattern on US 30, right? I just trade market structure on US 30, right? I don't trade market makers pattern on US 30. I trade market structure on US 30, right? So you will not see what level we on, level one. I don't do that. I purely just trade market structure and zones. So just looking at the month last month, we had a month of rise, right? Month of November, price went up, right? When we're looking at the zones, right, and market structure, what was our market structure? We look at market structure, was like this. So we had lower lows, right? Well, here where we had a change to the downside, lower low, lower high, lower low, right? Then what we had a test and we had a break, right? So right now we literally just broke out of it, went back to the top side, right? Do we have a significant pullback? Well, we're not on the data. Do we have a significant pullback here? Let me see. Significant pullback, right? How many pips is this small retracement? This is 418, right? Everything prior to that is not 14, it's 800, right? 900, 900, so that's not enough. So that's not really a significant pullback. So price is just pushing up. Notice how many weeks of rise we got, right? So we're out of sync right now, right? Price is just doing what it needs to do, doing what it wants to do. And a lot of this has to do with what's going on right now in the world, with the wars, with everything. And this is why certain pairs, when we have, world occurrences like it's happening now, I stay away. Why? Because the rules that govern the market, are not respected at these times. And if they're not going to respect it, I'm not going to trade it, right? This is why I'm not trading US 30 that much. You don't hear me speak every day about US 30 or breaking it down like we used to. You don't hear me break down gold, right? You don't hear me break down these pairs because, again, anything can happen. A bomb drops down. You like, yo, what happened? I was expecting this, right? But you should be expecting that with all this turmoil, something could just go down, right? Something could just happen. And the fact that it's so unstable, these pairs for me, are not that they're unstable, but they're not following my usual, trading plan. So that's why I stay away from them guys. Me personally, you do what you like to do, right? But all these weeks of rise comes to a point where the market is has to retrace back down. Has to. 1, 2, 3, 4, 5 weeks, bro. That's a lot, right? So let's look at our 30-minute on this one. 30-minute, we had 1, 2, 3, 4 previous days of rise, right? Prior to that, we went over this in the thing. It's going to be times where it does that, but I don't want to be stuck on these times, right? And we had news. Friday we had Powell speak, right? So we know that what he brings to the table is, is fucking up everything, type of deal, right? So we understood that this was a possibility, and we spoke about that on Thursday's class, right? So market structure for 30 is something like this. Higher high, higher low. Big moves. Big moves. All right. So, this is where we are with US 30. US 30 to me is still I'm not trading it. I'm leaving it off. Gold, same thing, right? When we look at the market makers pattern on gold, notice Meek, if you're still in here, look what I have up here. Questions. If I have questions, I'm not trading. This is why I said that what you did in the class, that's perfect. Again, I have questions. This is why I'm not trading. This was the previous pattern that I had. Right? I believe we were on the 4 hour. Right? 4 hour pattern. What happened here? Right? We were 3 o'clockish, then all of a sudden what happened? Price just went up, violated, right? We are back to the previous peak high. So once this breaks out of this, right? If price chooses to break out and continue to go up, then we'll have to readjust. What would the price, what will I readjust to, right? I will not have this zone. This will be my second level still. This is still my first. This will be my second, right? And we have a level 3 rise. Now I'm in line. But right now, the fact that, hey, we still trading between here and technically we're trading between here, right? This is the zone that price been trading, right? Between here, right? So I want to wait for price to decide what's next. Once price decides where it's going, I will reanalyze, readjust, you know, and try to get back in line to what's happening, what the charts are showing. But until then, right, at this present time and moment, for me, I'm just guessing where price is going. I'm not trading price, right? I'm guessing where price is going. And again, this is based on my trading rules, right? Some people's other trading rules, it will check out for them to be able to trade, you know, whatever they're trading, you know, and I respect that, right? I can see that over here we had a change. I can see we had a change, change retest. I can see we had a break a structure up here. I can see all those things, right? I can see the price is moving up, right? But I don't know where total price is moving to. And because I don't know that, right, I can't really trade that because I'm just trading some form of price action with certain sets of rules, right? I can trade this like I trade US30. I can, right? We're just trading the zones. Just trade the zones, you know, and let the zones and the market dictate what's next. I can do that because that's people's trading strategy is just that, right? And I'm okay with that. But gold, you know, I'm used to trading gold a certain way, right? So I just wait for my presets of rules to come back intact, right? So right now, this is what I have. I have questions on this one, right? Just like US30, right? Well, not really US30 because there's no market makers pattern. We're just moving up, but it's too much up, right? This is not COVID season. COVID, you knew what was happening, right? And last but not least, Bitcoin, we broke. We're back, we broke. We at 40, right? I got the alert. We're looking good. I told you guys get in weeks ago. Tell me, Mr. Pedro. Talk to me, Pedro. We at 40, man. We were at 26, 25 when I told you guys get in. We was all the way down here, 25, right? We knew we were at the low of V1. We knew we were at the low, right? Just so you guys can see, we knew what we were in Bitcoin. We had our previous 3 levels of drop, right? We had a peak low, we pushed up, higher high, higher low, higher high, chop, bottom of consolidation, 25, get in. We had the low of consolidation, get in. And look what price did. Right? Now we had 3 months of rise. We ended November with the 3rd month of rise. Right? Am I expecting this month to rise to give us another rise? No. Go up maybe and come down and end with a no net or something like, or a low lower than where December started. Right? That's my expectation. Right? But Bitcoin, it doesn't really follow complete market makers' behavior. Why? Because the people are the market makers. Right? So if people start believing in Bitcoin and start buying back Bitcoin, right? Instead of big institutions, because a big institution just bought a whole bunch of Bitcoin last week. This is what causing this price to move the way that it's moving right now, right? You could go look that up. If we keep buying, it's going to continue to rise, right? There's no dictator. There's no boogeyman, you know, running this show. Right, you have a lot of people influencing this show, but not like the other currency pairs where you have set, entities that actually run the show, right? This is no one's running this show but us, right? This is why they don't like Bitcoin, because it's run by the people technically, and they could induce you or pump fear, right? And the news could start pumping fear, Bitcoin this, Bitcoin that, and people are just gonna do what? Nah, I gotta get out, right? I gotta listen to them. They know something I don't know, right? And then you get out, right? And then you drop back down price, and then these guys buy it back again at a cheap, and then they tell you, oh, Bitcoin's on the rise, Bitcoin's on the rise, Bitcoin's on the rise, all the news, Bitcoin's on the rise, and then, oh, I gotta get in, fear of loss, FOMO, boom, I gotta go in, and you get back in, right? But they made you get out, they bought it back, then after they bought it back, they put on the news that, hey, it's time to buy again. After they bought low, they cashed out, and they're back to make money. So it definitely is being manipulated by people, right? But, you could reap the benefits of that if you understand it. So that's what we have for Bitcoin, guys. So this month is looking real good, right? We got 1, 2, 3, 4, 5, 6 out of the 9 pairs, right? That we have a clear understanding of what's happening and probability, a high probability of where the market is going to go, right? Now that you have that, weekly insight and monthly insight, now you got to go into the daily insight on how to use that knowledge for your daily, points of interest and your daily setups. And again, that's what we go over on the 7 p.m. class, Monday through Thursday, 7 p.m. New York Standard. Then after we get these points of interest, then the execution of that is given at the daily live trading room, right? Which is Monday through Friday. And it can happen at any time. Could start, depending on news, could start at 3, could start at 5 a.m., 6 a.m., 7 a.m., right? It all depends on how the market is moving. And in order to really, to get that link to join that live, you need to be, join the Discord, because that's where Mr. Jumper posts the link when he's ready, right, to get on. So, and that's basically it. Any questions, guys? Any questions at all? Good Sunday session this Sunday. Great Sunday session this Sunday, right? And just to reiterate, remember, guys, we're having a prop firm giveaway for December, right? In order to qualify for this prop firm giveaway, you have to be a member of our Discord channel, and also you have to be a subscriber to this YouTube channel. And on Christmas Day, the 25th, we will be announcing the winner for a prop firm challenge. And again, just think about how you can start your year off right. 2024 is your year. Pass that challenge and start making this bread. What do I like about Funded Pips? 5-day payouts. You don't gotta wait 30 days to get your first payouts. Every 5 days you can ask for a payout and you get paid. So doesn't be, there's no other prop firm that I know with that type of payout. The closest to it is 7 days payout. These people got 5-day payouts. So make sure to take advantage of that, guys. So guys, I see you guys tomorrow, 7 p.m. Make sure to like, make sure to subscribe, and have a great Sunday, rest of your day. Peace out, guys.